The migration story is horrendous because it looks to me as though migration's on the way up again.
Yeah, that's right. So, look, the net permanent long-term arrivals data. So I've got a chart left. The one on the left's done by Tarek Brooker. It's really good. Basically showed that over the first 9 months of this year, we had record net permanent long-term arrivals. So it's not exactly the same as net overseas migration. So what it is, that it's basically the monthly leading indicator series that the ABS does, and it measures border movements. So when you come in, you do a passenger card, and you say, "Oh, I'm intending to come as a traveller, like a tourist." You tick that box, or I'm intending to stay long term, or I'm a resident returning. Those sorts of things, and they basically put in that bucket. So if you're short term, they just you go in the short term series, and if you're intending to stay long term, or you're permanent, it's permanent and long term. And all they do is they net it out. So if you're someone who signs that card, you go out, you leave, they match it off with your passport, I guess, and then you come back and you do another one. They try and take the net series, and historically, it's matched net overseas migration fairly closely, and that's the chart on the right by Alex Joyner. So it doesn't match it in a number sense, but it matches it in a directional sense. So when the net permanent long term arrivals jumps, usually net overseas migration jumps, etc. So based on that, it suggests that immigration's rising again after falling back a bit last year. And and it's also been sort of reflected in the rental market a bit, because the rental vacancy rate the rental market's retightened this year, right? So according to Cotality, the rental vacancy rate has fallen to an all-time low again. So it looked like it was loosening last year. So the national rental vacancy rate a year ago, this time last year, or October last year, was 1.9%, and now it's 1.5%. So it tightened up when immigration looked like it started to fall. The rental vacancy rate picked up a little bit, and that reflects not just immigration, but also more households moving into shared housing, that sort of thing. It takes the pressure off the rental market a bit. But now, according to Cotality, this year, the rental market, the vacancy rate's fallen again. The number of rental listings has crashed. It's actually down about 17% across the capital cities on a year ago. So the number of homes listed for rent has crashed. The rental vacancy rate's gone to a record low. And asking rents, so that's the advertised rents, I should say, are now picked up again. So they're now starting to rise. I'm just trying to find a chart on that I've got here somewhere. Oh, here we go. I've got a chart here. So that's the bottom right. So that's from Cotality. So the top right shows the rental vacancy rate. It's fallen the aggregate level to a record low again. And the bottom right shows the advertised rents in orange. So after advertised rents rose by about 40+% over the last 5 years, added about $10,500 to the typical tenant's annual rental cost over 5 years. So, the typical renter now is paying roughly $10,500 more to rent a home than they were 5 years ago, which is just insane. Rents are now picking up again. Now, that to me tells you or suggests that migration is tightening. Again, you've got record net permanent long-term arrivals, up 6% on last year. Usually correlates with net overseas migration. Net overseas migration differs from border movements because it's basically measured on they're called the 12-18 rule. So basically, to classify as being a net overseas migrant, you have to have been in the country for 12 out of 18 months. So it's slightly different definition, but they tend to follow each other. So here's the thing. So the federal government's actually made a whole bunch of rules to actually increase immigration. So a couple of months ago, they released something called Ministerial Direction 115, which pertains to the international student market. So what it did, it's done three things that aims to actually boost immigration. And this hasn't been discussed much in the media, but it really should be. We should shine a light on it. So for starters, the federal government has raised the planning level for international students by 25,000 for 2026. So they've said that universities, you can bring in 25,000 more international students than you did last year. But here's the rub. That's only a soft cap. So under the Ministerial Direction 115, institutions are actually allowed to bring in 15% more than that cap. So what they've done is they've done 295,000 is the planning level, and they've distributed that across all the institutions, saying you can have this. Your indicative cap's this, whatever. What they've said is that you can actually go 15% above that, and the Department of Home Affairs will do nothing. And it's only when you go above 15% above your cap that we'll start to slow down visa processing. Right? So if you're a small institution and your indicative cap is 10,000, you can actually bring in 11,500 international students before the government will start slowing down application processing. So it's not really a 295,000 cap, it's a 295,000 cap plus 15%. Now, here's the other thing they've done. They've done two more things to boost students and therefore migration. They've also lowered the risk weightings on a whole bunch of South Asian nations. So if you're from India, Nepal, Sri Lanka, places like that, they've now lowered the risk weighting for those countries, for students from those countries. What that means is that they now don't need to show as much evidence, financial evidence that they can support themselves, English language standard proficiency. They don't need to show as much evidence or documentation to get a student visa. It's just easier for them now. To make matters worse, I think 13 universities, at least a dozen, have also had their risk weightings lowered under Ministerial Direction 115. So what that means is that these universities now can self-declare and they get less scrutiny, and they can basically bring in international students a lot easier because their risk weighting's been lowered. So there's just less scrutiny now. So those three things, they've increased the cap. It's a soft cap. You can actually go 15% above the cap before you don't even get penalised. So if you go above it, you don't get penalised. There's no fines or anything. It just means that once you go 15% above, they'll start slowing down approvals. So if your cap's 10,000, then you try and bring in 15,000, well then the last couple thousand, you'll go to the back of the queue sort of thing. But you can bring in 15% more. So they've significantly raised the speed limit basically on that. They've also lower the risk weighting amongst Indians, etc. And India is now our biggest source in a given year for international students. So China still is our biggest overall source of students, but when you look at it on a flow basis, India is now the biggest. And for temporary migrants, they've basically made it easier for Indian students to come with less scrutiny, which just make it easy to get a student visa and study in Australia. And then they've also, as I said, a dozen or so universities have had their risk weightings lowered, so they get less oversight as well, and it makes it easier for them to recruit. So this whole Ministerial Direction 115 is geared around increasing student flows into Australia, which just means more migration. Now, it also comes at the same time as Canada is cracking down on international students, and so is the UK. So Canada, as I said, is doing a population freeze. They're trying to basically, dramatically cut the number of student visas that are issued. And where do you think, and most of them are from India, where do you think they're going to go? They're going to go to Australia, and we've made it easier to recruit those people. The UK is also cutting back. Well, UK and Canada competes with Australia for international students. Well, if those two countries are making it harder for international students and we're making it easier, where do you think those students are going to go? They're going to go to Australia, which means more immigration. Now, so because of this, the former Deputy Secretary of the Department of Immigration, Abul Rizvi, he forecast a couple of weeks back that Australia's new normal for net overseas migration is actually 300,000 annually. So that's actually about 15% more than what Treasury is forecasting. Now, the significance of that is, just to put that into perspective, Australia's net overseas migration averaged 90,000 per year in the 60 years following World War II. In the 15 years leading up to the pandemic, it averaged about 225,000. So it went from 90 to 225,000. That 225,000 was big Australia immigration, the Kevin Rudd era, etc. In the last five and 1/4 years, so since December 2019 to the March quarter of this year, which is the latest net overseas migration data we've got, net overseas migration's averaged 270. So it went from 90 the 225 for 15 years. The last 5 and a bit years, it's been 270. Now, Abu Rizvi reckons the new normal is 300,000. So immigration is just getting ramped up and up and up. Now, why that matters is because the national, according to AMP chief economist Shane Oliver, Australia's cumulative housing shortage as of the start of the year was about between 200 and 300,000, according to Shane Oliver. That was the cumulative housing shortage. And that housing shortage basically began in the mid-2000s when Australia massively ramped up immigration. Again, up to that 225,000. Now, the National Housing Supply and Affordability Council, their latest state of the housing supply report came out, I think, in May. They forecast that over the next 5 years, under Treasury's immigration forecast, which is significantly lower than Abu Rizvi's, that Australia's housing shortage would worsen by 79,000 over the 5 years to the 2029 financial year. Right, so that's the 5 years of Albo's housing accord. However, in their sensitivity analysis, and that's the chart on the bottom left, the National Housing Supply and Affordability Council, they said that if the population grows 15% faster than Treasury's forecast, which is exactly what Abu Rizvi suggests with his 300,000 NOM figure, then Australia's housing shortage is going to worsen by 200,000 in the 5 years to June 2029. So that to me tells you that if the housing shortage was already between 200 and 300,000, according to Shane Oliver, by the end of 2029, if we keep this high immigration going and if it's 300,000 a year, as Abu Rizvi suggests it will be, that our housing shortage is going to go to between 400 and 500,000 by 2029 because immigration demand, population growth, is going to far exceed housing supply. And what do you think that's going to do to the rental market? Right, we've already got a rental market where rental vacancy rates are already at a record low. We've had a 43% rise in rents in the last 5 years, according to Cotality. It's added nearly $10,500 to the annual rental cost for the typical Australian over 5 years. Well, if we're going to have a housing shortage that's going to get worse by another 200,000 over the next 5 years, last year and the next 4 years from here, what do you think that's going to do to the rental market? It means the rental vacancy rate's going to probably fall further. And the only reason why it wouldn't fall is if we have more people moving into group housing to compensate, right? But is that really, an improvement in living standards if Australians now have to share housing with people because they can't afford to rent? And it's the only way to avoid paying higher rents is to split it with randos. That's what we're going to have to do. Or kids are going to have to stay with their parents for a lot longer. So we're going to have children living with their parents in their 30s because they can't afford to go out on their own because it's too expensive. So, having a housing shortage, we've already got a very acute rental crisis here. The federal government has opened the international student floodgates, right? It's not just international students. We've got the volume of temporary migrants in Australia is at a record high. It's about close to 2.6 million people. That's not including visitors. So it's about 9% of the population now is on a temporary visa. It keeps going up and up. We've got graduate visas now are booming because the more you increase student visas and then you allow them automatically to have 2 years plus post-study as a graduate, well, then those numbers are going up. We've also got ballooning bridging visas. So bridging visas are handed to people who are awaiting decisions on their immigration claims. So one of the problems Australia's got at the moment, we've got all these fake students here. And when the government when their visas expire and the government wants to send them home, they then appeal. They try and claim asylum or something else. So then they go on a bridging visa for, a couple of years while they wait to have their claims heard out. Well, the number of bridging visas is now at a record high as well. So they're refusing to return home. Well, all this means is that immigration is just going to stay red hot. And, again, 90,000, 6 years post-World War II, 225,000, 20 years before the pandemic. The last 5 and a bit years, 270,000. Now Rizvi reckons 300,000 is the new normal. It's unbelievable. And this just means that, worsening housing crisis, worsening infrastructure crisis, forget about net zero. Like the government seems to have this fantasy that Australia can magically go to net zero by 2050. Well, how are you going to do it if the population grows by 50% by then? Like if you've got 50% more people roughly consuming stuff, buying stuff, using energy, etc., we're obviously going to have more emissions. That's just, more people means more emissions. But the government has this fantasy that we're going to suddenly magically go to net zero. At the same time, it's going to keep growing the population like by Canberra every year. It's just none of this makes sense. And it's not good for productivity. The charts I showed before showed that as we've ramped up immigration, well, productivity's fallen because we don't have the infrastructure to keep up. We don't have the business investment to keep up with all the extra people. The majority of the immigration we get is actually low skilled. So individually, they're not actually boosting productivity either, on average. Of course, there's a lot of good ones as well, but, on average, I'm talking about here. So this is just a recipe for lower living standards. And I've said this before, Martin, I live in Melbourne, and Melbourne was 3.5 million people at the turn of the century. We're now about 5.5 million people. So we've grown by 2 million people in 25 years-ish. And by 2050 something, like, early 2050s, the Victorian government forecasts are going to be 9 million people in Melbourne. So we're going to magically grow by 3.5 million people over the next sort of 25 to 30 years in Melbourne. Like this is it doesn't make sense. Like how is that going to make you better off? I mean, the roads around Melbourne are now a potholed. We've got crime everywhere. The economy is absolutely sick. And it's a congested nightmare. The only thing that's actually good about Melbourne is, I guess the house prices haven't risen for 7 years because the government's, taxed the crap out of property investors, etc. But, from a quality of life perspective, this is pretty bleak. And it's very bleak if you're a renter because you're just facing competition every single year from hundreds of thousands of people that are imported in the country without enough housing to accommodate them, which just means you're just competing for more and more, your competition just keeps going up every single year. And as a result, we've got, massive rental stress. We've got rising homelessness, and we're going to have people living in more and more, youngsters, well, not youngsters, but, 25 to 30-year-olds staying at home with their parents because they can't afford to move out, and a lot more people living with randos. It's not a very good situation here. And the sad thing is that National Housing Supply and Affordability Council data that I told you about, so their base case, as I said, was 79,000 shortage over 5 years based on Treasury's immigration data, or 200,000 shortage if population grows 15% faster. But here's the rub, and it's shown in the bottom left. If the population was merely reduced, well, not reduced, but grew 15% slower than what Treasury forecasts, instead of having a shortage, we'd actually have a surplus of 40,000 homes over the next 5 years. So Shane Oliver's 200 to 300,000 shortage would reduce to 160 to 260,000 shortage, right? So it's not going to fully solve it, but it means the situation improves. And the National Housing Supply and Affordability Council's own modelling, which is shown on the bottom left, shows that the number one solution, if you want to solve Australia's housing shortage and rental crisis, is to cut immigration. Because if you slow the population growth, you allow housing supply to keep up. Or even better, like what's happening in New Zealand, whereby because the population growth's collapsed, the dwelling stock, so housing supply, is now growing much faster than population growth. And as a result, the housing situation is improving rapidly. So, if Australia cut immigration to sensible and sustainable, to a level that's below the nation's ability to build housing infrastructure, well, guess what? The housing shortage would ease and the rental crisis would ease. But instead, we're doing the opposite. We can't build enough homes because we've got structurally high, costs. So costs have gone up 40% since the pandemic before. Land costs have gone up. We've got a shortage of labour. There just isn't the capacity to build more homes, but then we keep funneling in more people. It's a recipe for disaster.